thanks to a great October offsetting a flat November and a down December. U.S. stock indices posted gains during the fourth quarter. The Dow Jones rose in quarter four, but even so, the blue chips lost 2.25% for the year. In the last quarter of 2015, the Federal Reserve finally raised interest rates. The slowdown in global manufacturing spread to America, and oil prices fell. Hiring totals were impressive, and housing indicators mostly positive. Terrorism, ongoing weakness in Chinese manufacturing, the oil supply glut, declining corporate profits, and dollar strength all bred considerable anxiety among investors. The quarter's biggest financial story was the Federal Reserve's big move, its December 16th decision to raise the federal funds rate by 1/4 point. Investors widely expected a December rate hike, so the focus quickly turned to what the Fed might do in 2016. Its December dot plot chart showed a median projection of 1.4% for the federal funds rate at the end of this year. In November, annualized core consumer inflation was right at the central bank's 2% target. The headline Consumer Price Index had just risen 0.5% in a year. Annualized wage growth had improved slightly to 2.3% by November, and the headline unemployment rate stood at 5%, another development likely influencing the timing of the Fed's upward move. Leaders of China, the second largest economy in the world, claimed their economy would meet its 7% growth target for 2015. But their claims were met with some skepticism. China's manufacturing sector appeared to be firmly in contraction territory. At quarter's end, factory PMIs in Japan, South Korea, and Taiwan were all showing sector expansion. The Eurozone manufacturing sector seemed in good shape. Output had accelerated at the fastest pace in 20 months. The European Central Bank expanded the scope of its economic stimulus as the year ended. The Thomson Reuters Core Commodity Index sank 23% for the year. As for the U.S. dollar index, it gained over 9% for 2015. Crude oil sank 17% during the quarter. Unleaded gasoline futures fell 12% in 2015, which paled compared to the 20.5% drop for natural gas and the 37% descent taken by heating oil. Along with the quarter four gains for the three major indices, rising 17.8%, the Dow Jones Internet Index was the quarter's top performer. The CBOE VIX, the fear index, lost 25% for the worst quarter four performance of any U.S. benchmark. How will stocks fare in the first quarter of 2016? They certainly fared poorly on the year's first trading day, when another global sell-off prompted by a poor factory PMI reading in China sent equity indices on three continents down 2 to 8%. One bad day need not foretell the whole quarter, however. For stocks to regain momentum in this and subsequent quarters, oil prices have to rebound at least slightly, corporate profits have to rise, Wall Street has to accept the long-planned slowdown in China's economy, and the dollar needs to be a little less dominant, a rather long wish list. Stocks have advanced nicely in the previous decade when monetary policy was tightened. With luck, perhaps they will do just that this quarter and this year. This concludes our video for the fourth quarter. As always, thank you for placing your trust in LIfePlan Financial Group. Have a wonderful day.